Welcome in traders. In this video, we're going to go over today's trading session. We are currently looking at ES and the time frame we are looking at is the 2000 tick chart. Now, the only supportive indicator I use is the 21 EMA, which is this purple line fluctuating up and down. And other than that, I solely rely on price action and trend lines to look for high probability setups. Now, the first thing I like to do during the pre-market session is I like to identify the resistance and the support. These key levels play an important role later during the trading session. These are the purple lines that I have. This is the resistance and this is the support. Now, the importance of them is during the trading session, we can either be in a range like we are here, or we can break out of these key levels, have a breakout pullback, which can lead to a continuation. Now, during the open, price slowly but surely was working higher. As you can see, we have a series of higher highs and higher lows. Now, initially, I had the trend line drawn a little bit tighter, something like this. But once we started breaking out, I ended up widening the uptrend. And as you can see, we broke out of the resistance. And instead of failing, right, which most ranges do, we ended up pushing higher, having a breakout pullback, and turning into a trending bullish market. Now, I didn't draw it wider until we broke out and had the spike in the channel. Once I saw we pushed above the resistance and it started acting as a support, this is what gave me confirmation that we are now in a bullish trending market. So we didn't have any entries here. It started around this area. So I started looking for second entries around here. Here we only have first entry long, and then we ended up pushing higher. And over here is where price action started getting better, right? So counting from this high, we have a new high. First, did we have any break higher? Actually, no, we didn't have any break higher. Well, we had a mini one here inside of this inside bar, so we can count this as the first entry long. So we had it's a little bit hidden. So we had a new high, first entry long, pullback, second entry long, right? And this downtrend also played out. This mini correction had a break and a new low here. Now, I specifically didn't like this trade. If you took it, I see why, but I really didn't like it only because it formed below the EMA. And if you zoom out, this looks like one leg down. So this correction looks like one leg down. And usually when it looks like one steep leg down, you can definitely anticipate a second leg, right? What I was waiting for after this was I was waiting for a strong push above the EMA, a reclaim, and a higher low, which we never got. Now, if you did take this trade, it wasn't a losing trade because our stop loss goes a quarter below the entry bar. So it would go like somewhere around here at this purple line, and we'd put it a quarter below it. So we didn't even really come near it. And what I was looking for was either a higher low or a reversal pattern. Now, we finally got a reversal pattern here. If you count from this new low, using the counting technique, we have a new low, first entry, short, that failed. We pushed higher, and this was the failed second entry short. Now, as you can see, this bar closed red. Even the body towards the end closed a bit strong. If this was a green candle, I definitely would have taken it. It would have been definitely a nice entry. But because it was a red candle, closed bearish, I didn't like it. And then once this closed bearish and the second bar closed below the EMA, we started going flat. As you can see, price is stacked in the middle of EMA. So once that happens, you can draw a small consolidation like this. And what you can wait for is a breakout pullback, right? So you can wait for a breakout out of this congestion, pullback. And if you get a higher low at the EMA, that would be great. We never got it. We ended up pushing higher and making a higher pivot than the previous one. This uptrend is still valid because we never broke it. If you zoom out, you can see this uptrend is still intact. When we break below it and then we make a new high or a new extreme, then you can, pause looking to go long. But since this is still intact, we haven't broke it, we're still looking for long opportunities. So we're still looking for longs. Let me delete this. Okay. And then over here, initially I had the trend line drawn a little bit tighter. And guys, when the market is trending and it has a pretty strong trend, we trended about around 60 points here. it's better to draw the opposite correction. So we're going to draw the bearish corrections tighter instead of wider unless it's proven otherwise. So initially I had to draw it tighter like this, but once we kept making lower lows and higher lows, I ended up drawing it wider, right? So can we go long now? No. The downtrend is pretty steep, it's pretty strong. So we either want to see a reversal pattern or we want to see a break of this downtrend, break new low, and then we can look for a reversal pattern or a higher low, right? But as long as this downtrend is in play, we can't really take longs right away. Or if we get a stronger push and we retrace it at least 50-60%, then we can look for a second entry long from that new high made. But we didn't have that. What we actually had was only a higher low. So we need to redraw the uptrend, right? And it would have been nice if we had a reversal pattern, but we didn't. You know, counting from this new low, we have a new low, first entry short that failed, right? And this is also a higher low. Now, the reason why I don't like this higher low is for two reasons. Well, number one, this was such a strong downtrend. We didn't even retrace 50 or 60%, right? And look how it formed. Usually you want the higher low like around here, right? You want it in this area where I put this red circle. Like if it was here, it's better. You want to catch it before the leg completes, or you want to catch it before the end of the move. You want to catch it in the beginning, but it formed later, some broad price action, and then it formed. Even if it had formed here, I would have not taken it. I would have wanted something stronger like a reversal pattern. So if you took it, I see why, but you definitely have to be more cautious. Now, because the uptrend is, you know, the bigger pattern, it takes precedence, and we need to focus on the uptrend making a new high. Now, some of you guys might have drawn this tighter, but since we're expecting the uptrend to make a new high, you can widen this mini uptrend, right? So you can widen it a tad. I had it widened like this, you know, expecting for price to make a new high and complete this trend. Now, today was one of those only first entry days. So counting from this recent high, we have a new high, only first entry long, and then we ended up breaking and making a new high. So unfortunately, there was no clean setups on the way up, which is okay. You know, you don't want to force a trade and then end up losing. It happens. So we broke the uptrend. We had a break and a new high. So when this happens, three things can happen. We can have a continuation, we can have a strong reversal, or we can have a consolidation that turns into a range, right? So as you can see, price couldn't even manage to break below the EMA. This is how strong this uptrend was. And we ended up having a stronger push higher. Now, as you can see, I have my uptrend drawn like this. I was eyeing a wider alternative, something like this. And as you can see, it fits nice. And this is definitely a secondary channel, so you have to be more cautious. And you want more confirmations before you can blindly just take a plain second entry, right? But as you can see, this fits good, right? It's nice and tight. We have some confirmations here, some confirmations here. If you zoom out, geometrically, it aligns with the market structure. So this is what I was eyeing. But what you could have taken, right? Because we had a break, new high, and we kept working higher and higher, no reversal. So this is a indicator that we're going to have a continuation. You can draw this uptrend like this, right? You can draw it as a spike. And what we're waiting for now is for this uptrend to get a new high, right? So we're going to wait for the bearish correction to play out, right? So we have a break and a new low of the bearish correction. And now this is the green light for us to look for second entries to take a long. So we have a new high, first entry long, pull back. Actually, this is the second entry long. And then over here, and this is the ultimate setup. What do we have here? We have a double trap, right? This is the ultimate setup for the bears who tried shorting late. They ended up getting trapped. And it's a nice small bar. We're holding above EMA. You could even look at this as a multiple test, multiple confirmations, right? At the bottom, a small support being established. This was the first trade I took of the day, and it was a nice scalp about 9.5 points, small candle, low risk, high reward. So this was my first trade. And then we had a break and a new high for this mini uptrend, right? Then after we had a break in a new high, I was waiting, seeing what the price action was going to do. We had a small bearish correction, nothing indicating a strong reversal. And then what happened? We ended up pushing higher and higher. So once I saw this, this confirmed my bigger uptrend. And now we're going to respect this bigger uptrend. And we are going to be looking for long entries, right? Because instead of reversing once again, we ended up pushing higher and higher. So this confirmed the bigger uptrend. Now, this was later in the afternoon. Volume started slowing down a bit. It is a short week because of the holiday. So there wasn't too much momentum and price action. So we're just going to wait and see the corrections, and we're going to still look for long opportunities. If it presents itself, great. If it doesn't, you just have to sit on your hands. So we had a nice strong correction working lower here. We had a break and we had a new low. So what am I looking for now? Well, the uptrend needs a new high. It's still trending, right? So the mini correction played out. We had a break and a new low. The best situation we can do here is look for a reversal pattern, right? In this situation, you want a failed second entry short above EMA. So counting from this new low, we have a new low, first entry short that failed. So what I was looking for was a failed second entry short here at the EMA. It formed here, but it's far. You know, it's also steep. There's no pullback. It's far from the EMA. You know, this is a bad trade. I wouldn't even mark it. But for educational purposes, I'll just, or just so you guys can understand how a failed second entry short looks. This is how it looks, counting from the new low, first entry short failure, pullback, second entry short failure. If it formed at the EMA, definitely would have taken it, but it didn't. And price started going a bit sideways. And around this time, it was getting close to the close. And I usually don't like to trade 30 minutes before the close. There's a spike in volatility. And we ended up trending lower, definitely profit taking, right? So that was it for the day. I had one trade, you know, quality over quantity every day, and it was simple double trap. These are the best setups because downtrend played out. Not only are you getting in after the second entry long, you're getting in during a double trap, as well as multiple confirmation, a support being established, EMA holding strongly. The more confirmations you have, the more confidence it gives you. And it was a quick trade, easy scalp, and that was it for today. And I'll see you guys in the next video.